In the search for return, high yield has been increasingly more popular, but what's the risk reward on this type of investment?
Well, you have several types of reward by investing in high yield, and one is high current yield. You're getting paid coupons for your investment. On the other hand, you also have potential for capital appreciation. Bonds that are high yielding, should companies improve or experience ratings upgrades, et cetera, you could see the prices of their bonds increase much more than you would, say, for high grade debt, which is mostly impacted by interest rates. The risks, on the other hand, sub-investment grade debt, it is implying a risk of default. And that's your greatest downside risk by investing in high yield bonds. A diversified portfolio obviously mitigates some of that risk.
I know you just started a new international bond fund. Well, I'm just interested in the type of opportunities you're finding there, especially all the headline risks that you're seeing every day coming out of the international arena, whether it be China, whether it be Europe or India today.
IHY is the International High Yield Fund we launched, and it's the global high yield universe ex-US, outside of the US issuers. Okay. So that represents 35% of the global high yield market. So one thing we're finding is just good diversification opportunities. On the other hand, be it in Europe or emerging markets, there are more and more very successful companies whose own balance sheets are actually pretty clean, much like the corporates in the US. These companies also, though, because they're in Europe right now or in emerging markets just about at any period, are associated with other risks. So on a company-by-company basis, for the same rating or for the same type of leverage that a US issuer might have, they pay more in terms of interest rate or coupon. So generally, you're being compensated a little more, all else equal, by investing overseas.
So in Europe, it's just you got to look for the companies that sort of are diversified outside of Europe, and you're getting the extra premium just because they're based there.
That's part of it, and the other thing is that some of the European companies that are more based, some of the telecom sector are concentrated. You know, their businesses are concentrated domestically, but because everything is worth a price, and it's just a question of, amid all the volatility, some of the super higher yielding assets. The key with all of this is to be in a diversified portfolio.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to